What's good, YouTube? I hope you all managed to survive our first OPEX of our final quarter for 2025. This week definitely had a lot of volatility, and it definitely made a lot of traders uneasy, and it also acted as a great reminder to not get overconfident, because just as fast as you can get gains, you can also lose them in this market. The entire analogy behind a staircase up, elevator down definitely reminds you of this week. So just be aware that we are headed into seasonally one of the harder weeks as we approach the end of October. So have some precaution because the market can still give us one final push down or a few more, or we can continue to barcode in between, that aggressive candle we had Friday. Not this Friday, but the Friday before that. But without further ado, let's just go ahead and get started. So the first ticker that we are going to be looking at here is AMT, American Tower Corporation. So what I really like about this setup, there's quite a few things actually. The first thing is we've had some really nice structural consolidation that ended up breaking down, taking out our September 15th external low. And I like it because this candle did it with displacement. So in a perfect world, when you have some kind of buildup that breaks down, you usually come back and reject it, right? But in this case, that displacement that caused new 52-week lows was countered by more displacement. And I'm going to be doing a video over this, but this is a little method that I've been back testing, and it's called broadening formation inversion gaps because you establish new broadening lows that then almost instantaneously or immediately get reclaimed with displacement. And I like this because it's very similar to CISD, but it allows you to capture reversals way before, how in just for really quick, when you have that change in structure, your market structure shift or whatever, you have to wait for lower high, lower low into a new higher high, and then you look here. But why not capture all of this and then this, right? Why not be a part of both legs that lead into that structural change? And so it's been a great way recently that I've kind of been backtesting. I don't see a lot of people talk about it either, broadening formation, inversion gaps. And I will make a video of this separately sometime in the future. And this has that confluence because not only is it coming off of manipulation lows, right? Now you're setting up for a potential power of three. So you have your consolidation, your accumulation range, your manipulation, and now your potential distribution range, which is also known as your AMD. And I should have it right here. Yep. So this has a lot of great potential, and I really like Friday's candle because not only did we redeliver into the gap, but you came back to refine this inefficiency and come back and fill a lot of those orders. And the way that looks also is when I zoom into the 4 hour, look at this. Look at what was rejecting, look at what is now supportive. So I really like how on the lower time frames, we're now utilizing a flipped area of supply into demand paired with a reclaim of our last consolidation lows coming off of the broadening formation inversion that is potentially now setting up for a really good reversal. And not only that, but when we take our little manipulation leg and project our standard deviations, look at where the -2 lines up at the 199 high, which would be, if this starts to reverse, that final target. And then the -2 exists at the last previous weekly low before you started to break down. So AMT has a lot of characteristics that I like for that reversal to potentially start taking shape. Now, unfortunately, you do have earnings coming up in about 10 days, so this could affect you. But other than that, earnings out of the way, if this didn't exist, this has really great risk reward. Next up on the list is probably one of my favorite names here, and ticker is DG, Dollar General Corporation. I really like this because it has again, similarities to AMT. I will zoom out a little bit here because this was your entire weekly leg here. So this range here to the top of that range. Um, Let me get an actual, there we go. So you can see this was the entire weekly range here from here to here, right? That was the entire weekly range. And when I take into account that range, remember, you have your equilibrium. Everything above is premium, below is discount in terms of the trend. So because we are in an uptrend here from a higher time frame degree, we did come down into our discounted zones of the weekly. And I really like how we swept this weekly external here that hasn't been tapped since May 2025 and redelivered price into a really nice breaker and fair value gap. And the confluence that exists there is we took out an external low, we immediately reclaimed back up. We had displacement into Brownian lows with aggression, so this also becomes an applicable, Brownian formation inversion. And we came into the weekly discount of that range. And look at how price aggregates out. So to me now, I'm like, okay, hey, we're looking like we want some pretty good reversals here. And if this is going to be the higher low of the weekly, right, there's a lot of untapped potential for DG to start pushing up into like 110, 113, maybe even as high as 150. That would be kind of the final area I would assume price goes. Um, but from the most part, we got really good delivery out of our weekly OTE. Now we have a 3-1 on the daily. So I am looking for kind of two scenarios here. Either this 3-1 delivers and pushes us higher, establishing new highs above 107, or we get a bit more of a discounted entry off of this potentially new change in structure off of the lower time frames. But for the most part, I'm still trying to get up into those previous month highs at around 110, 112, which would be my initial targets. But it has really good characteristics. You have the LRLR. Again, like even if you do dip, you have what is also something I talk about. Whenever you're looking for these MMBMs, a lot of the times these market maker buy models, when you start to only hunt the buy side of the curve, meaning you're only looking for those previous highs, a lot of the times that MMBM, so let me show you, like let's say you have this downtrend, right? This is your sell curve because you're only taking out previous lows, which is why it's called your sell curve. And then when you start to hunt the buy models, you get this. Look at what develops. An inverse head and shoulder that is now hunting buy stops, meaning only your previous highs. So within this buy curve, a lot of the times people that actually don't mention it is when you get these buy models, the initial development is what could develop that inverse head and shoulders. So keep an eye if you do get a retracement because I think it's still buyable. And that would kind of confirm that the overall narrative of price wants to potentially push higher into earnings. And another one is Dollar Tree. It's very similar to DG, so I don't really want to kind of cover this one as much because the characteristics are the exact same. Dollar Tree, ticker DLTR, has pretty much the exact same kind of setup going on here. Next up on the list is NVIDIA, and I will be using the 4-hour ticker NVDA. And the reason I will be using this is just because we are coming into a pretty decent lower time frame establishment here. And what I mean by that is from swing low to swing high, swing low to swing high, we are coming into a point of confluence. We have not only a nice gap, but it's also the potential higher low. And the possibility of this working, I bring up only because there was also a lot of positional call flow, meaning you have a bit more weight on where they think the direction of NVIDIA could go. So there is speculation behind it, but I like the confluence of the positional call flow relative to us coming back and retracing off of the higher low into a gap, and we are at discount. All I really need to see now is a quick reclaim of, honestly, this 184.38 because it's the 50% mark and it's also your previous highs until you establish new ones. So a lot of great I guess you could call it SR around this 140, 184.38. So if we can just get a reclaim above and start to balance above that, I do think NVIDIA can start to attempt into like the 190s, maybe even 200s. And if we take the deviation here, because if this is the manipulation here, we can also project what the -2 would be, -1 and all that. So yeah, look, you get the 192, 196, 200, which would be my applicable targets if NVIDIA does manage to start balancing above 184 off of a 4-hour or daily iteration. Versus if we do break below and we do lose that 178, I can only anticipate us breaking down into the 170s and even as low as 164. So a good one for both ways. That's more based off of price development and those candle closures. One of my favorites, and I've already been positioned here, but it is ABBV. And this one is just, I guess you can just call it, I mean, it's better off the 4-hour, the structure. And this is just a simple higher low that could lead us into expansion. We're looking for price delivery out of discount. Remember when I talk about if you can identify the structure correctly, so high, higher low, higher high, potential higher low, then you have a good potential to then capture the next expansion that could take you into continuation of the trend. So if we were in a set of higher lows, higher highs, higher lows, higher highs, higher lows, then there could still be a final continuation into the next higher highs. And if not, I would still try to anticipate some kind of expansion into the 235, 239 area. But I really like how it's starting to shape out. You have a really nice inside 4. The daily closed really close to that high of day after sweeping this daily external here at 230.65. You can see we kind of came back down. So I would like this progression to continue. Whether or not you get one more low, I still think it's setting up. Whether you do this or you kind of balance out here, test the gap, and then trade higher, I would still like to see 235, 239 within the next 2 weeks. eBay, this one is a troublesome one as we are still stuck in a really nice solidified range here, but I am starting to like the development off of the exhaustion lows. You see how we have this nice manipulation candle. We come in, sweep the top of the range, come back down, but we exhaust. We do not continue lower. Then furthermore, we are followed with displacement. So we have a really nice set of higher low here. Now we're kind of developing within the internal. And I think as long as eBay from here now, what this is really important because you have aggregation into kind of a failed supply zone, right? Everything above 93 into 94.3, so about a dollar window up here has been troublesome for eBay, but we have a good reference point now. Because of the exhaustion lows that failed to sweep and break down, we actually recovered with displacement, which is what I like to see. And so I think personally now, as long as eBay does not get a daily close under 89, I think it can finally make an attempt to kind of get some internal buildup to fuel it enough to then go for the 95, 96 area. If it can do it before earnings, it would be great. If not, it would be cutting it close. So we'll have to see how this one plays out. DE, very similar to Dollar General and Dollar Tree. And you could see there's good set of similarities here. We came into yet again another weekly higher low. So when I take into account the range of the higher time frame, right? This is my weekly low. This is the weekly established high right up here. You can see everything above is premium, below is discount of the order flow leg. So as price starts to redeliver, we come into that discounted zone of the range. And what I like about this is yet again, we also get a nice little sweep. So we took out the 435.95 low from April 2025, and you can see the turtle soup, right? You get the turtle that pokes its head out and immediately comes back into the range, and you did it with aggression. Whoops. So I like the fact that you displace into broadening lows and then you displace back into the range. So now we have a nice weekly OB, a weekly external, a higher time frame broadening formation inversion gap, and we're coming into the higher time frame discounted zone. So as long as DE now respects, I would say 445, right? We don't get a daily close back under 445, and now we can build above. I am targeting up prices up into that 467 471, 474, 478, and even as high as 482. So can we now flip the script and start to complete a little bit of this nice LRLR that could act as a really good set of liquidity if this is going to finally change its structure and or narrative. And all you really need now is this was your lower high, lower low. All you really need DE to do from here is push above that previous lower high, establish a higher low, and then it starts its buy side of the curve. So again, this one is looking really good. I like the LRLR, and I do like that we managed to hold above previous day close. So far the development is looking really nice. One of my favorites, CRDO Technology. And as you guys see, a lot of these names that we trade, I'm telling you, the reason why people are always like, how are your trades so successful? Or like, why are you so? It's because I try to trade the same setups over and over again. And now, granted, this does take some time and effort because I do have to chart like 100+ tickers every day to consolidate a list of like 10 or 15 that have some form of repeatable charts, some form of similarities that I know based off of the 3+ year backtesting that I've done have some kind of rewardable edge. So when you have my watch list and you're going through them, you're probably like, man, it's the same thing over and over again. And honestly, it gets boring, but that's because it's proven and tested. And I have my model that I like to stick to, right? So just throwing that out there so you're not getting bored. But CRDO Technologies ticker CRDO. Once again, yeah, I've been repeating. You try to find the overall trend of something and what it's doing. Once you have that solidified range, so I'm taking the bottom end of the range into the top end of the range, and you start to ask yourself, okay, where is price within that range? We've already started to get some really nice compression, and you guys know I love to talk about the staircase compression that I always mention when you're absorbing price within an external leg. So this is your external, this is your external, and you're absorbing it within, right? You're compressing price really nicely. And that's kind of what's happening here with CRDO technology. We have our established impulse move, higher low, higher high. And now within this external, you're getting that internal buildup, which is usually really good when it's in a form of this, right? Remember, you can run up a staircase easily versus a hill that's a lot steeper. It takes effort. So when you want to find those liquidity runs that have the path of least resistances, it's usually something like this, right? Where prices compress and kind of methodically being pushed down, respecting the overall narrative of the trend. And so, as CRDO is now attempting this breaker open gap established by your earnings catalyst, you finally came back into your discount. 618 golden pocket was touched. So, all you need now is CRDO to get above like 146, and this can start to break out into 160 plus. Otherwise, you can get maybe one final driver to complete the gap, maybe a little bit more lower. Although you did get a full body close on Friday, while the market was still a little bit weak. So this is already looking really good. So if you come back and retest like 137, 138 and respect it and push above 146, if that daily close does come, I would anticipate price to start pushing up higher headed into earnings. But this is really good build up. I love how it's respecting. I love the staircase compression here because again, once price breaks out, ask yourself, what will be the path of least resistance? And that will be up. Next ticker I like, and this one's a pretty simple one. Ticker AAOI, Applied Optoelectronics. And the reason I like this is just because it's in a lower time frame like MMBM here, and you're pretty much just going to a series of consolidation, expansion, consolidation, expansion, consolidation, expansion. And I do think that expansion here, as long as you stay above 28, takes you up into 37 and 42. I won't spend too much time on this, but the build up within the weekly and the daily is starting to look really, really nice again. And I do think this can take you up into that 35 plus. Next up on the list is BTQ. Now, this one is a bit more of a speculative play. So, you know, discretion is advised here. And I would be careful as this is a very volatile name. But I just really like the breaker paired with the open gap. And I mean, I wouldn't really take this into consider like a discounted type of play, but if we take our Fibonacci's here and try to understand where we are. Okay, so we know that anything in between 8 and 10 is a discount of the 4-hour range, right? This is your last retracement back before the aggression up. But I like how price is kind of contracting here, right? You're getting some really nice compression, and I would assume there's going to be some kind of stop hunts that occur here. You already had one to the upside, so I would try and say maybe a little stop hunt like this, and then it pushes up. But I do think based off of how we are absorbing price above a previous all-time high paired with a gap and aggression, I do think this is setting up for a really nice breakout this quarter. So keep an eye on BTQ as you start to kind of develop above the 8 and 10 zone. You could get some opportunity here. NEO, another one I really like, and this one is pretty straightforward. If I take into account the last retracement here and extend it up, we came into the 50, higher low, higher high, higher low, higher high. And so I'm taking the same approach here, although now we have a bit more of confluence. So taking into account the last established low before the displacement highs, higher low, higher high, we are now back into that discount. Once again, you can take the range, right? Look at the range, understand where price is. Okay, price is back under its equilibrium. We know that here we could find fair value of the trend. Fair value meaning discounted prices that could trade higher. And when you pair it up with confluences, remember when I'm looking for these OTEs or these higher lows or these retracements of the uptrend, you want to find confluence. Are we at a previous high? Are we at a gap? Is there a supportive inefficiency? Did we sweep a external low with aggressive recovery? So this has a lot of those characteristics. Not only did we fill the gap, we swept a bunch of external lows, although you did aggressively displace, so that entire staircase compression analogy is not really applicable here, which makes this a little bit tougher, but it is also related to, kind of China. So really nice inside day after a really good gap reclaim off of our discounted leg here. So as long as NEO can develop above sixes, I would like to give this the benefit of the doubt, and it starts to recover from here and potentially try to trade back into the high sevens. Google, this one is more of a momentum trade, and it's based off of the 4-hour here. I think I have my chart on this one. Yeah, there you go. There you go. So I really like this 4-hour expansion here, and I quite personally don't think it's done. I think it can still push a little bit higher before earnings, and that's kind of based off of how price came back, respected, and pretty much held near high of day on Friday. So I think if this development wants to continue to have legs, I think this expansion gives you a bit more of a breakout into 260. Next up on the list is Shopify. Once again, this one I'm a little bit late to it, but I kind of want to see how price now shapes out because you have a failed attempt here, and I think it could come into some form of like compression, if you will. So let me adjust this a little bit. So what I mean by that is kind of you fill out some of this void and excess here and eventually try to break out because you have the swing low, swing high, you came back, redelivered, swept, and you also held the discount. And then you aggressively pushed up with a gap. The gap got corrected, and then you got a really nice SR flip here paired with your previous all-time high breaker that used to exist. And so I think if Shopify can continue to develop above like the 150s, honestly, if you come back, sweep a little bit, compress, I think this can get ready for the next breakout. So a really good looking chart. There was also some positional flow that came into it. Next up on the list is low NHD. And this one was a really nice, I believe, weekly higher low. So I have a bunch of random stuff on here. Let me delete this one. I thought I had this one already prepped. But for example, weekly discount held inside, came back into a nice little refined demand here, held pretty nicely. When I go into the daily, you also came back and restructured. Look at that displacement off of your broadening low. So really nice broadening formation inversion gap as well that displaced through your previous day and week 50% of the higher time frame, higher low, weekly and or monthly. Discounted zone was respected. So I do think now the way this is developing, whether or not you kind of redeliver lower or not, you have kind of something like this, right? I think HD and low, and HD is the exact same chart. So whatever I'm talking about here is going to be applicable for HD, which is the next ticker. But I do think these are going to be really nice market leaders headed into this quarter. Unfortunately, for low, you do have earnings coming up soon. And I believe the same thing for HD. They're kind of in the middle of November, early November, so there's still some time, but I do think they want to trade up. I think HD wants to tap into at least 397, 400 in the short term, and for low, I think you can see 249, 252. But ultimately, really good reversal potential, still early in its phase if it wants to continue higher. I think they're both really good charts. But yeah, that's pretty much it for this week's list. If anything changes, I will probably post it on X. So hopefully you enjoyed, and that does conclude all of the names for this week. And just remember, man, I do all these videos for you guys, and I hope it's educating you somehow. A lot of it is really repeatable, but that's basically how I trade. There's nothing crazy, there's no secret sauce. It's just keeping your concepts simple and trying to replicate the same approach every single time after you find some form of edge. And remember, I have my educational series, the My Method, Your Market, that I do want to release as soon as possible, but I can only do that when I get to 5,000 subscribers. I'd like to make it some form of accomplishment and I guess get some back within the process. But again, it's all free. So, leave a like, comment, share my page with all your friends and family. And as always, I will see y'all next week. See you.